Hi everyone, today I want to talk about 3 stocks that you can buy with your new stimulus money. On May 16th, the House of Representatives passed a $3 trillion stimulus bill, and that means another $1,200 to the American taxpayer. So what should we do with that money? Well, I have 3 stocks that I will be buying. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you're interested in purchasing this beautiful $6 million home at Big Sky, go ahead and like and subscribe. It has 5 bedrooms and 5 baths. It's 7,158 square feet. If you're a skier, it seems like you could ski right out of your house. It is directly adjacent to the ski slopes. Keep your dreams at the front of your mind and like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. First up is AT&T. A lot of people have been talking about AT&T, especially from a dividend perspective. Their dividend recently got over 7% yield because the stock price continues to drop. That yield is looking very attractive, especially with the CEO, John Stankey, coming out and saying that the dividend is well protected. It's pretty normal for a new CEO to come out and say good things about the company that they just took over, but it is good to see that they can comfortably pay their dividend and continue to pay down their debt at the same time. One of the most common negatives to AT&T is that they carry a very heavy debt load. But if they can continue to pay a dividend and pay down the debt load, as well as invest in things like 5G, it says here they're going to invest in things like 5G and continue to invest in Warner Media. One thing to understand with AT&T is it's not really a growth company at this point. It seems to have maxed out some of its potential, but really it's raking in a lot of cash. And a lot of cash means high dividends. As long as they continue to pay down their debt and they can reliably pay this dividend, a 7% return is great. Just to speculate a little bit, if they pay down these debts, they could potentially look at new acquisitions and then have some more growth potential. But for right now, a 7% dividend is a good starting point. As I have mentioned, they have pretty substantial debt. The orange is interest expenses, which is $8.4 billion paid in interest last year. It shows here that their profit has been increasing from 2017 to 2019. In 2019, they profited $4.6 billion even after paying their dividend. If they continue to use that income to pay down its debts and become a more lean and efficient company, I believe AT&T has a bright future. In conclusion, AT&T doesn't offer quite the same rapid growth potential. However, it does have over a 7% dividend yield, which it has been growing consistently for 36 years, and it's currently 27% off of the highs that we saw in February. Next up is American Express. There were concerns that American Express wouldn't be able to maintain the low charge-off rates that it has with its loans. However, the data has come back and they have held steady. On Friday, they released their loan delinquency and write-off statistics, and they announced it was 1.7%. which was 0.1% higher than February, and February was 0.2% higher than January. So there is a little bit of a trend of increased delinquencies. However, it's not a large increase yet. Decreased profits can be attributed to the fact that the amount of loans that they have outstanding was $10 billion less than they were in February. And this is simply because people are not spending money the way that they were before. When the economy is on a freeze, people aren't spending as much money on their credit cards as they were. And because of that, that's going to reduce some of American Express's profits. Also, a lot of the government bailouts that are offering very low interest rates to business owners has reduced the amount of money that is being charged to American Express. And this represents a 76% decrease year over year for the first quarter of 2020. In terms of long-term outcome, I just don't see that this short-term decrease in spending and loans being charged to American Express cards is really going to be a large effect on such a large company. They're currently yielding 2% dividends, and they're about 30% off of their February highs, so there's definitely potential for upside, and clearly American Express is going to survive this situation. They just might see reduced revenue for the next year or so. Just to dig a little deeper on American Express, this Morningstar report was published on 12 May, and it said that the price was $83.14 and that the dividend at the time was 1.97%. American Express actually went down a little bit from there, which caused the dividend to go over 2%. Still says estimated fair value is $125 per share, which gives you a pretty significant upside. And it is stating that this company is undervalued. The main thing that's driving American Express's value right now is they have a pretty wide moat. They've gained similar acceptance to Visa and MasterCard, and they are gaining in their acceptance throughout the world. They've also developed a very strong usership with businesses and travelers, and they've become one of the go-to cards for those specific types of purchases. Some of the cons for American Express is that the federal bank rates are basically at zero right now. So in terms of American Express as the bank, it's a little bit more difficult for them to make money and be profitable. In terms of first quarter, their growth has slowed, which was expected, but it can't really be ignored. It's also expected that the Fed is not going to raise rates until the end of 2020 at the earliest. So to sum up, spending trends have been decreasing, so the amount of debt that American Express is lending has been reduced. With the Fed bank rates being very low, it's hard for them to make money on the bank side either, so they are facing some headwinds, but again, I see these as short-term, and they are still projected to have some year-over-year growth by the end of 2020, and they're currently undervalued at $82. Last on my list is Fortress Transportation and Infrastructure. This company focuses on the transportation of energy, people, and supplies. In terms of aviation, they own 240 air assets, 76 commercial airlines, and 168 engines. 108 of the company's engines and 69 of its aircraft are currently leased out to operators. The average remaining lease on these terms is 14 months for engines and 33 months for aircraft. They also own offshore drilling apparatus for oil extraction. Its largest holding is in Jefferson Refinery. This refinery refines oil, but it also serves as a terminal for oil distribution. And then this asset is an oil distribution center only. It's for transporting energy long distances to various refineries. Now that you know a little bit about the company, let's dig into their financials. In Q4 of 2019, they had a 62% return on investment, which is quite high. In Q1 of 2020, they did take a slight loss. I'm assuming that's due to the Rona situation going on. Since their assets are in aviation as well as oil, those are two industries that have been pretty heavily affected by the current situation. But since this company does own a lot of physical assets, they do have physical items to back their equity. It also shows here that their debt to equity ratio is 52.4%, which is pretty modest. That tells me that they have some credit that's available to them to help them weather this little situation and that they can grow into the future. All right, let's get into some of the projections. So the current price is $9.56. It's up 16.59% in the last day. It's currently down 51.07% year to date. Looking at the forecast, it's currently projected that it will be at least $12 per share in the next 12 months. The median projection is $14 per share, and then the high projection is $24 per share. So if we meet this high projection, that means we're going to have over 100% growth in this stock. Considering that the stock was above $20 per share at the highs in February, it's not unlikely that this stock could be up to $24 in the next 12 months. And lastly, just to point out that I'm not the only one bullish on this stock, all 8 analysts polled are currently putting in a buy for this stock. All right, to sum up, AT&T is my first pick. They have a really high dividend right now, and they have a clear goal on paying down their debts and becoming a more profitable company. Amex is currently facing some headwinds with some decreased loan amounts. However, their default rates have not gone up. And then Fortress Transportation, they're facing some headwinds with the decreased aviation and decreased price of oil. However, I don't see those things lasting into the future, and this company is able to be very profitable in the fourth quarter of 2019, and I believe that at the end of 2021, they will appreciate approximately 100%, plus the 13% dividend they're currently paying. Of course, this is all my opinion. Please consult your financial advisor before making any decisions, and this is only for entertainment. And with that, let's get to the jelly. So today's jelly is The Last Dance. I was really not going to use this as a jelly for one of my episodes. However, the more I watch it, the more interesting it is to me. And having been able to watch Jordan play, it's been really cool to watch this documentary. If you have any interest in basketball, it is truly amazing. So here's the trailer.
guys not allowed? Nah, I'm just kidding. What time is it? My mentality was to go out and win at any cost.
Jordan is the most talented player in the NBA by far.
The show of the 90s, the team of the 90s. How you doing?
Whenever they speak Michael Jordan, they should speak Scottie Pippen.
We created an image that people want to live up to. I think that's all you can hope for.
So I'm only a couple of episodes in, but it's already been incredible. The one sentence that has stood out to me the most is Michael Jordan was as good at his job as any man has ever been at their job, ever, which is truly an outstanding statement. And with that, please like and subscribe so you can catch all my future episodes, and have a great day.